Hi guys, very good morning. Due to some technical issues, we had to delay the live. I'll just screen share the market now. Chat. So yeah, good morning guys once again. We'll talk about the post market of yesterday and post market of yesterday and whatever the news which has came in the middle of the night after the market close and which has impacted the today's market, and we'll talk about the pre-market also. So, welcome back today. We'll start a fresh session today. It's Friday and 19th June. We have got a really interesting set of triggers for today's session. A big Wall Street recovery overnight, a massive geopolitical update on the Iran front, and a stock specific story right out of our own IT sector. So let's break it out all down phase by phase. So we'll talk about the yesterday's close. So let's start by looking back at how we closed yesterday on June 18th. Yeah. So Nifty closed at 24,168, and the index opened flat to positive at 24,073 today. Dipped to low of 24,036, but pushed up to touch a high of 24,189 during the day. So the board story here, Nifty held its ground, stayed firmly above 24,000 right through the session, and we'll talk about the market breadth. So now here's something interesting to note. Within the Nifty 50 basket itself, breadth was actually a touch negative. 22 stocks advanced against 828 that declined. But if you zoom out to the whole NSC, the picture flips, which is like 1,897 advances against 1,382 declines. So, what exactly does that tell us? The border market, especially mid and small caps, did the heavy lifting yesterday, while a few index heavyweights held things back a bit. Sectors in focus. You should focus. Which are the sectors you should focus today? So, two sectors really stood out yesterday: healthcare and aviation. Both outperformed the border market, and we'll see exactly why when we get to gainers list. And we'll talk about the top gainers. We'll talk about the winners. Yesterday's winner, Max Health led to pack. It's up a strong 6.46%. Adani Power followed up to 4.97%. Adani Green Energy gained 3.23%. And Tata Capital, it added 2.10%. And NTPC rounded off the top five up to 1.76%. Healthcare, power, and renewable energy clearly had the spotlight yesterday. Yeah, we'll talk about the top losers. On the other side of the board, they were top losers. So VBL was the biggest loser yesterday, down of 2.79%, and Maruti slipped 2.23%. Wipro fell 1.50%, and Nestle India was down 1.07%. And Tech Mahindra, it dropped 0.83%. Yeah, consumer and couple of IT names took a breather yesterday. Yeah, the Renko chart. Quick technical nugget. The Nifty Renko chart is now showing five consecutive Greek breaks, all sitting above the 13-day EMA. The current break opens at 24,000 and is targeting at close at 24,500, 5 points above. That's a clean, sustained bullish structure if it plays out. And we'll talk about FII and DII flows. Let's check who's actually putting money in. Both FIIs and DIIs were net buyers yesterday. FIIs bought close to 1 or 2 crore rupees, and DII were the heavier hand again. So buying over 1,564 crore rupees, domestic money continued to do the heavy lifting yesterday. So the next is volatility. Yesterday's volatility and also valuations. We'll talk about that. The couple of quick numbers to note down. India VIX has cooled further to 12.67, genuinely low. Fear levels are minimal right now. Sensex PE stands at 20.09, and also Nifty PE at 20.77. Still reasonable, not stretched. Nothing stretched. Yeah, we'll talk about today's technical levels, today's playing field. On Nifty, support at 23,979, then 24,073. Pivot sits at 24,131. Resistance comes in at 24,225, and then 24,283 above that. On Sensex, yeah, supported 76,831 and also 76,993. Resistance at 77,403 and 77,651. And also we shouldn't forget the Bank Nifty. Support at 57,419 and 57,693. Resistance at 58,131 and 58,295. And yeah, we'll talk about the news which overnight bloomed the India market. Again, the Iran deal. We are seeing from past 3 days the Iran news is impacting the global market directly and indirectly, actively and passively. Yeah, since it's a genuinely a big global development, overnight the US and Iran signed a 14-point of understanding to extend the ceasefire, including in Lebanon, and this is the biggest part actually to reopen the Strait of Hormuz. The agreement also includes a $300 billion reconstruction plan for Iran and the removal of all categories of US sanctions against the country. Both sides have agreed to continue talks toward a final deal over the next 16 days, 60 days. So now, why does this matter to us? Why exactly it's impacting? Yeah, we'll come to that point. The Strait of Hormuz is one of the world's most critical oil shipping corridors, and reopening it fully means a smoother global crude supply, and that's a genuine tailwind for India, given how much of our import bill depends on oil prices. Yeah, and markets reacted strongly to this. After Wednesday's hawkish Fed sell-off, Wall Street bounced back hard on Thursday. The Nasdaq surged 1.91% and S&P 500 gained 1.08%. And Dow added another leg higher too. And here's the standout story within that. It's chip stocks. Intel jumped over 10% after news broke that it's struck a deal with Apple. Micron rose 8% ahead of its earning next week. Nvidia added 2%, clawing back some of its recent losses, and AMD and Broadcom both advanced over 4%. So overall, a strong risk on recovery overnight yesterday, driven by both the Iran de-escalations and tech rebound. And yeah, one thing to note, US markets are shut today. A quick but important point for today, specifically, I should mention. US markets are closed today, Friday, June the 19th, today, for the Juneteenth holiday. So there is no fresh Wall Street triggering coming through during our session. Today's mood will largely be carried forward from the strong overnight bounce, plus whatever domestic stock specific stories play out. And speaking of domestic stories, here is one that IT and tech investors should definitely have on their radar today. HCL Tech. It has announced an investment in Servam AI, as I mentioned yesterday, and also we have mentioned yesterday also after the market. The news has been spreading over all the internet. You can check out our pages also. So India's homegrown AI startup, the company is acquiring a 10.5% stake through an investment of 1427 crore rupees. This is a clear strategic push by HCL Tech to deepen its presence in India's AI ecosystem, and it comes right on the back of a string of AI linked partnerships we have already been tracking from the IT majors this month. Watch HCL Tech closely today. This kind of strategist stake buildings often draws fresh investors' attention, especially with the broader AI theme still running hot globally. Yeah, so what's the bias for today? Let's all pull it together. Domestically, we have got a genuinely constructive setup. Five straight green Renko breaks. Both FII and DI bullying. So VIX and Nifty holding firmly about 24,000. Yeah, guys, we have a quick update. See the current market. Here you can see Nifty. Nifty has it's near resistance level. You can see, and there is a lot of chance it may go down by 20 to 30 points. You can keep an eye on this. It can come down to 20 to 30 points now. It's trading near supply zone now. You can see it's also near R1, first resistance. You guys keep an eye on this. And also, I'll come back to the news. So globally, the overnight mood is risk on with the Iran de-escalation as the strong tech rebound on Wall Street, as I mentioned. The only thing to watch since US markets are shut today. Yeah, quick update. We have had a bit confusion here. See, yeah, see, guys. Actually, it has broken its support here. Yeah, see, it has broken its support here, and it also created a supply zone here. It has broken the support and it acts as a resistance now. So there is a possibility that it may go down by 20 to 30 points now. See here. Keep an eye on this. Yeah, I was talking about the US markets. Since they are shut today, I expect somewhat thinner global clues through the day. And today's price action could lean more on domestic flows and stop specific stories like HCL Tech, Servo AI deal again. My overall bias heading into today is cautionally bullish with the 24,225 to 24,283 as a zone to watch on the upside and 23,979 as the key cushion if we see any profit booking. Yeah, that's the story setup for today, guys. News setup. So yesterday's close at 24,168. Healthcare and aviation leading, both FIS and DIS buying. Overnight, a strong Wall Street recovery on Iran peace progress and chip stock rally. And right here at home, HCL Tech making a strategic AI move with its Servo AI. Let's watch how the opening bell shapes up today. Yeah, stay with us for the whole session and we'll be giving you new updates about the stocks and we'll be updating if there is any updated news also.
Hi guys. In our community channel, we had given a put option today. Nifty 24,300 put option, we had given a call. So we had given a entry price of 330 to 335, and that it has reached the first target of 350, second target of 360, and the price has currently made a high of 370. So if you need this kind of call signals, you can always invited to join our community channel. GoForge is good for a long term position. Yeah, I'll just check. Since one of the viewer asked about GoForge stock, so if we look at this stock currently, it has regained this level. So we can see the price has tapped in the demand zone and it has reacted strongly. So yeah, it is a good stock to consider for a long position. So you can wait for the retest here and you can look for a long position as well. You can expect 2 to 8% as we are in a 15 minutes time frame. You can look for a 2% to 8% of a target. So yeah, one of our viewer has asked about Adani stock on 5 and 15 minutes time frame. I'll just talk about it. Yeah, so the stock, if you look at the 5 minutes time frame, the stock has given us a buy signal here, and we got a buy signal on 18th of June, which is yesterday at 1 5 p.m. So we got around 3% yesterday. So since the stock is in uptrend, you can look for a retest in any of the support levels. So if you see that there's been a strong momentum after this buy signal, it has broken a multiple supply zones here. So there's a cluster of zones formed here, and you can see a triple EMA line turned green. And if you look at this matrix, the second indicator, we it shows all the time frames to be in a bullish structure. So you can wait for a retest around here, and we can consider this stock for a long position because it's still in uptrend. So if you look at the 15 minutes time frame, so yeah, so if you look at the 15 minutes time frame, the system has given us a buy signal here. So just wait for the price to close above this resistance level. Then you can look for a strong momentum for in a upside. So the price is trading near the supply zone, which recently broke. So it will act as a demand zone now. So it will definitely give a reaction there and wait for the price to close above this resistance level, so that you'll be having a good momentum on the upside. So let me know, put out the stocks, your favorite stocks in the chat box. So we'll analyze for you.
Yeah, the crude has slid further to 78.31 dollars per barrel, while US WTI has slipped down to $76.14 per barrel. On the domestic front, MCX crude oil is heavily pressured below its immediate technical levels. As I mentioned, the formal signing of the US and Iran peace deal, tankers has officially begun moving freely through the critical state of Hormuz shipping lanes, including major Saudi flagged vessels. Analysts actually calculate that this historic agreement will release more than 85 million barrel of standard crude oil. So back to the global market, combined the sector completely crushing the energy risk premium. The structure remains fundamentally capped unless it can somehow reclaim 7,100. Yeah, it has also broke the resistance here. We talk about the gold. Spot goldly, it has dropped 1% to trade below 4,180 per ounce. In the Indian domestic physical markets, 24 karat gold rates have cracked sharply, sliding towards 1 lakh 49,000 per gram, per 10 gram. A surging US dollar index testing 101 and a hawkish Fed. The Federal Reserve left interest rates unchanged at a 3.50 to 3.75%, but heavily signaled incoming support for rise rates later this year because higher borrowings cost vastly increased the opportunity cost holding non-yielding bullion. Institutions are like dumping paper gold. Furthermore, the easing of West Asian tensions via the US-Iran pact has entirely deflated the safe haven demand. We'll move to the next commodity. It's silver, plunging 2% globally to trade below $65 per ounce. Domestic MCX silver is reflecting its incense. Distribution has panic unwinding accelerations. Silver is absorbing direct hits from both a stronger dollar and cooling global industrial sentiment because the Fed is dropping its easing bias. Speculative funds are aggressively unwinding industrial commodity longs, with shipping routes normalizing and immediate tech budget anxiety. So silver is acting as the weakest link in the precious metal complex now. Yeah, guys, in Bank Nifty, it has broken the second support also. You can see, and there is a high chances that it may come down by 50 to 100 points. You also keep the eye on this. There is a chance 50 to 100 points it may come down since currently some of the viewer is asking, please share your view on Bank Nifty as per your AI chatting tool. Yeah, as we mentioned now, yeah, as we mentioned just now only we have mentioned about Bank Nifty. Yeah, I can see it's going down. It has broken the support level here. Now there is a chance it will go down again. 30 to 50 to 100 points. It may go down. And here, see, it's showing it's showing in multi-frame time frame. It's showing all red. That means the market is bearish. Chances, a lot of chances there is it may go down. That has predicted already.
So I'll be back in few minutes, guys. We'll discuss about option chains in Nifty and Bank Nifty. Until then, put your favorite stocks or put your analysis for today. Let us know what's your plan and what's your bias. So, guys, let us analyze the option chain right now. So, we'll start with Sensex. Yeah. So, if you look at the Sensex chart, you can see that there is a gap down opening here. So, in a 15 minutes time frame, we can see there is a gap down opening. And if you see the multiple time frame, the higher time frames are showing a bearish structure. So, it's currently trading near a resistance level. Yeah. So it is currently trading near a resistance level. We have a demand zone broken as well. So we can have a bearish bias for today. So let us just analyze an option chain. So yeah, hope you are able to see the screen here. So yeah, if you're just tuning in, it's already 10:12, 10:16, and the intraday structure has drastically shifted. So the 5-day winning streak we rode into this morning is facing an intense friction. So Sensex is down by 0.82%, and it is trading at, yeah, 0.79%, and it is trading at 76,800. So So remember our gold rule for reading options chain live. So we always trade from the perspective of the option writer. So option sellers are institutional desk with massive capital. So they write option to collect premium, meaning they build walls. So green bars represent put writing, which forms your support level, and red bars represent a call writing, which form your resistance ceilings. Though, so the striped diagonal lines indicate fresh active loading of positions during today's session. So let's understand this chart, understand the bar graph here. So we'll just zoom out and find where the absolute matter wall is on this chart. So if you are able to see the 77,000 strike, look at that massive, towering red stripe bar dominating the entire visual screen. So this is a textbook institutional overhead ceiling. So the fact that it is heavily striped tells us that the second the market shows signs of intraday weakness, call writers flooded this strike with a massive block orders. So why is this important for your intraday trades? Is because it acts as an absolute mathematical cap for this weekly cycle. So institutional desks are confidently betting millions that Sensex will not reclaim 77,000 before the June 25th closing bells. So as long as the trade tower stand tall and doesn't shrink, any minor pullback towards 76,900 and 77,000. I'll just show you the chart. Yeah, you can see here, we can see a broken demand zone in the technical chart as well. 76,900 and 77,000. If we see 70, we have a trend line here, we have a resistance here, we have a broken demand zone here. So we can see a lot of zones clustering over there. So, so yeah, as long as the trend tower stands tall and doesn't shrink, so you can see the 77,000 strike here. So any minor pullback towards 76,900 or 77,000 will be fiercely met with fresh supply. So do not attempt to buy aggressively out of the money calls while this all remain intact. So now let's bring our focus down to high stakes battleground, right, where the spot price is currently grinding. So we are trading currently at 76,772. So look at the 76,700 and 76,800 strike price. So this is where the actual money war is being fought. So look at the 76,700 first. So notice how we have, yeah. So notice how we have a neck and neck fight. So you can see the 76,700 and 800. We can see uh, there is a substantial green striped tower of put writers desperately trying to build an active intraday floor here. And but look directly to the right of it. Even call writers are aggressively matching that volume with the solid red stripe counter attack. So so we can see a neck to neck fight here. So now slide one step higher to the 76,800. So call writers have completely captured this level with the dominant red stripe bar. You can see the red stripe bar is slightly higher than the green stripe bar. So because the spot price is at 76,772, this 76,800 strike is currently acting as an immediate overhead shadow. Yeah. If you see this level here, 76,800. So there was a resistance here as well in a technical chart. So the price has currently tapped in and gave a candle here. Just remove the drawings, you will be able to see it clearly. Yeah. So the price has given a bearish engulfing candle here. These are strong signs for price going down. So the because the spot price is at 76,000, 762. This 76,800 strike is currently act as our immediate resistance level. The bulls are effectively sandwiched here. So you can, every time they try to bounce, they slam directly into the 76,800 call wall, while the bears are chipping away at the 76,700 put floor. 76,000, yeah, here. This strike. So understanding this, we'll talk about the retail sentiment versus market maker psychology on the screen. So notice the tiny hollow section at the tops of some bars. You can see here 77 500, 77 400, 300, 200, 100. These are the hollow blocks here. So those hollow segments represent a decrease in open interest. So this striped area is increase in open interest, and once the bar shows a hollow, it means that there is a decrease in open interest. So it means weaker long positions and over leveraged put writers who are bullish yesterday are actively panicking. So they are unwinding their positions and taking losses at the market slides. So at the same time, look down at the lower bounds, which is 76 500 and 76,000. So I hope you are able to see. I'll just check the comment section. Let me know if you have any doubts. I hope you are understanding this. So this is very important to understand the intraday bias. Yeah. So I'll continue. So when we look at the lower bounds like 76,500 and 76,000, we see strong green columns here, right? Yeah. So which are the next key structural line of defense? 76,500 here. So these are the key structural lines of defense. However, look closely at this one. So fresh red call writing is started to sprout at the top of the column. So it means institutional option sellers are getting incredibly bold. They aren't just defending the top; they're actively chasing the market lower, dragging their profit-taking ceilings closer to the floor. So yeah, let's summarize the entire layout into an actionable, trading blueprint for the rest of the day. So do not blindly catch a falling knife here. The option chain is displaying a distinctively bearish intraday distribution. So the market makers are completely heavily weighted on the short side. As evidenced by the massive red blocks stacked across 76,800 and 900 and monster wall over 77,000. So, you watch the 76,700 green support tower as well. You can see that there is a increase in this open interest. So if the index breaks and consolidates below 76,700 and you see that green bar start to shrink, while the red bar next to it, shoots up, like if you get a candle patterns like bearish or a evening star, then that is your cue that the support has completely surrendered. If that floor cracks, momentum algorithms will kick in definitely. So and the index will quickly look to go down toward 76,500, which we marked. Yeah, this is a so and potentially test the psychological bedrock at 76,000. So unless the 76,800 call wall is systematically discounted by heavy cash market, uh, any bounce you see is just a brief short covering blip. So treat bounces as shorting opportunities near a resistance rather than chasing a breakout. So keep your position sized controlled. Keep this chart open on your secondary monitors. Now let's watch how the next 30-minute volume candle prints against this level as well, or 15 minutes is enough. Now this is the intraday bias for Sensex and option chain analysis. Let me know your views on this, and let me know if you have any doubts. Put it in the comments. So for the same way, we will even analyze the Nifty option chain as well. Just change it to Nifty. Yeah. So the headline of the morning is clear. The bears have executed a massive intraday counterattack. Nifty is down by 0.82%, trading at 23,969. So we have officially cracked underneath the highly critical psychological milestone of 24,000. If you see 24,000 bars, there's it's a huge OI build up here. So before we look at the specific levels, cast your eyes on the top right corner. I just yeah, top right corner of the dashboard. So look at the India VIX. It has tickled up by 0.6 percent plus zero point 0.6 points, sitting at 13.2. So this means intraday volatility and fears are rising. So look at the put call ratio as well. It is sitting at zero point 0.9. Historically, a zero point 0.9 PCR is neutral to soft zone. No, it tells us that while a broader weekly structure isn't a total free fall panic yet, the intraday rate of change is aggressively favoring the bears. So as we look at these towers, remember we always view the data through the lens of the option writer. So these are institutional desk trading with hundreds of crores. Green bars represents put writing, which are your support flows, and red bars represent call writing, which are your resistance series. So diagonal strips means fresh money added today, or you would be seeing on 24,000 strike price or 23,000, 23,900. These hollow blocks means there's a decrease in the open interest. So, which means they are unwinding and fleeting. So let's see support and resistance level. Yeah. The main event on this chart is the 24,000 strike. So look at the absolute monster of the red strip tower standing tall right at 24,000. So it is the single largest red bar on the entire screen today. So what you are witnessing right here is a massive structural flipping of a level. Coming into this week, 24,000 was supposed to be a solid base camp for the bulls. But look at what the institution did the moment the spot price slipped to 23,974. It's currently trading at 23,960. So call writers aggressively flooded the 24,000 strike with massive fresh block orders, signaled by those yeah, signaled. Just a minute. I hope the chart is visible. Yeah. So yeah, signaled by it slipped to 23,974. So when market makers build a red wall that thick at a psychological level, they are effectively looking at the gates from above. So they are collecting massive premium and betting huge sums that the Nifty will not comfortably scale back above 24,000 during today's session. This tells us that any random minor bounce retail traders try to chase will immediately face heavy institutional selling pressure right at the 24,000 mark. So do not buy out of the money calls, hoping for a quick V-shaped miracle recovery while the red tower stands that high. So let's look at right where the current market action is grinding out. So it is currently trading around 23,960. So if we see, we were talking about this level, right? 24,000. See exactly price has reacted this, and in 15 minutes it gave us a bearish engulfing candle. So to add confluence to it, we also broke a resistance here. Price closed below the resistance. So these are the strong signs for price going down. So yeah, let's analyze our immediate surroundings at 23,950. Yeah, the price is moving here. 950 here. 900. I am choosing this level. If you look at the open interest, we can see a green bar which shows an increase in Y. So these acts as a support level. So notice that it has a decent green base. So I mean tries to try to hold it earlier, but tipped cap has quickly mounted on top of it. Call writers are actively encroaching on the bull's territory and trying to suffocate any intraday breathing. See that very prominent health green strip tower. This is our immediate line in the sand. Put writers have stepped back, retreated from our 24,000 and are heavily digging a fresh defensive trench right here at 23,900. So see for a break, let the price close below this. If you haven't still found out a bias or confused to identify, just wait for the price to close below this. You'll be having still more confident, high probability to enter there. So they're adding massive fresh positions today to protect Nifty from sliding into a deeper correction. But this gives you a clear visual layout of current boxing ring first. The institution have trapped Nifty between the 24,000 concrete ceiling and 23,900 structural low. So yeah, bouncing around in a 100-point range while option sellers on both sides erode the premium value of retail options. So if we go deeper into the psychology of the retail traders versus the big picture, big players on this chart, look up across the upper strike. I'll just yeah. So look across the upper strike 24,000, 200. So notice these red call writing blocks are consistently massive, and look at the tiny hollow blocks on top of the green bars. You'll be able to see this hollow blocks on top of the green blocks. So these hollow segments means open interest decrease. I've told you before. So it means retail traders who went long yesterday, example near 24,100 or 150, got completely got by this morning's global tech grad and oil repositioning. So they are actively capitulating, cutting their losses, and closing out the bullish put positions. So when put writers cover their positions, they have to buy back their puts, which adds mechanically fuel to the downward intraday momentum. So currently look at how the red call tower extends way up to 24,300 and 400 as well. So we'll be able to see there's a huge you know change in increase in the open interest. So even far away from the spot price, institutions are actively printing calls. They have complete confidence in the near-term weakness of the index today and are squeezing every bit of premium dry. So if we have to plan actionable game for today, so scenario, let's see it as a two scenarios. For first scenario, the bearish breakdown, it has high probability. So keep your secondary screen strictly locked on to 23,900 green support. I have marked here, right? So this is another support level. See if the technical influences and higher time frames. Yeah, okay. So wait for the price to close below 950 first, and for a huge fall, wait for the price to close below 900. So if Nifty slides down and print a 15 minutes candle below 23,900 and closes, look at this chart immediately. If you see the green tower start to shrink, this one, okay. If this green tower start to shrink 23,900, meaning put writers are pulling their capital out of a fear, and red call bars starts cascading downwards. So this is your trigger, okay. The support is officially surrendered, which means, so if 23,900 cracks, momentum algorithm will kick in and Nifty will look to rapidly slide down towards the next major institutional bastion visible on your chart at 23,800 and 23,700. 23, yeah, see. You can see a increase in green bar and 23,700. So if it breaks below 23,900, then it has high probability go towards 23,800 and 23,700. So this is scenario one. So scenario two would be, if the market tries to stage a recovery, if Nifty bounces, it will inevitably slam face, first into 24,000 institutional quarters. So if it reacts here again, it will go towards 24,000, right? So unless you see the massive red tower at 24,000 loses its stripes, if you see a call unwinding, if you see a hollow block, which is a low probability. But if you see a hollow block getting in 24,000 red bar, so any upward move is just a short covering trap. But the smart strategy in a distribution market like this is to use the relief bounces to look for shorting near 24,000 resistance wall rather than chasing breakout. So this shows a clear, aggressive institutional call distribution. Manage your risk. Respect the 24,000 ceiling. Watch the 23,900 floor, which is an important line for important support line. So and let's see how the next set of institutional block orders print. So we'll then discuss it later, like how it reacted. Yeah. So hope you guys understood the option chain. We had analyzed about Nifty and Sensex. We'll also just look at Bank Nifty within few minutes. So let me know if you have any doubts in this. Traders to plan for setups. So if you get an idea on this option chain data, so then you'll be able to verify your positions.
Stay tuned, guys. We'll be updating you the open interest and whatever the stocks you should look for today, and whatever the stocks, which are the stocks you should keep an eye on. So just telling you the stocks to keep an eye on.
we'll talk about Bank Nifty option chain now. Just a minute. So in the same way, we'll analyze the option chain for Bank Nifty. Yeah. So we'll first put the Bank Nifty chart. Yeah. So we are able to see the chart now. So Bank Nifty is currently down by 0.62% and it is trading around 57,579. So if you remember, Bank Nifty was showing serious relative strength compared to Nifty, acting as an economic shield. But again, look at the screen right now. The early morning bullish momentum has led to a massive wall of friction. Oh, you can see here there was a gap up opening. Just a minute. You can see that there was a gap down opening. It had gained this supply zone. It had regained here, and you can see a rejection over here. So before we pinpoint the exact strike price, let's refresh our core rule for live trading again. So we always read this data through the eyes of an option sellers. So why? Because retail traders buy options with small capital, but institutional desk write options with hundreds of crore. They build a wall. Green bar means put writing, which means support flows, and red bar means call writing, which means resistance ceiling. So green bar is nothing but a support, and red bar is a resistance ceiling. So diagonal strip means fresh aggressive money added today, and hollow boxes means traders are panicking and cutting losses. So if you see the 58,000 strike, so look at the absolute skyscraper of red strip tower standing at the 58,000 round number. It completely dominates the entire layout. So what does this tell us is it means the big institutional blocks have designated 58,000 as their ultimate resistance fortress for the cycle. The heavy diagonal straight pattern covering that tower means this isn't a old data. The second Bank Nifty attempted to push higher this morning. Big money flooded the 58,000 call option to cap the index. So for your intraday trades, this is a massive warning sign. When the market makers build a red wall that they cut a major psychological handle, they are telling you they will defend it with everything they have. They are harvesting premium and betting millions that Bank Nifty will not comfortably scale past 58,000 today. So as long as that tower remains standing, do not buy out of the money calls expecting a massive runway rally. So any minor bounce will be met with fresh institutional supply right at ceiling. So this is where the live money war. No, let's look at the live money current price. So our immediate surroundings is at 57,600 and 57,500. If you see this line, okay. So notice that fresh red call writing has actively surpassed the green put bars here. So you can see here, okay. The red bar is, the increase in red bar is slightly higher than the green. So since the index is grinding just 17 points, yeah, it has come down below 57,600. Right. Let's check the technical chart once again. Yeah, 57,600. If you see the technical chart as well, we can see a support zone here. So just wait for the price to close for high high confidence setups. So this is an absolute classical institutional tug of war. So look at this. Look at the 57,500 strike. We can see both the bars are equally placed. So, but if we look at the increase in OI, we can see that the red bar has a slightly higher increase in OI. So we have a solid green put over trying to act as an intraday cushion, but call writers are matching them step for step with an aggressive red stripe counter attack. Okay, so the sellers are actively trying to break the bull's immediate defense or defensive line. So at rate even 57,500 would be the next support. Yeah, this point. So this is the sellers are actively trying to reach the bulls, but let's see if they are able to the price closes below 57,500 as well. So let's go deeper into the market maker psychology on this chart. So look at the strikes sitting between our immediate price and the master wall, specifically around 57,700 and 800. So look at those distinct red stripe blocks climbing higher. Even though it is equally placed, if we see the change in OI, the red bar has a higher increase in change in OI. So yeah, when you see these fresh calls writing aggressively loading up across 57,700 and 57,800, where the market is trading below 57,600, it shows immense institutional confidence on the short side. They aren't just sitting back at 58,000 anymore. They are actively walking their positions down, locking in profit ceilings and closer and closer to the current spot price. So at the same time, look at the green support towers to the left of the screen. Notice how tiny the fresh green increase stripes are at 5700 and 57,200 and 57,300. Be able to see here. Okay, there's a small green, it's very tiny fresh green increase. So put writers are playing a purely defensive game right now. They aren't aggressive. They are adding new capital to. They aren't aggressively adding new capital to fight back. They're just hoping their existing bases hold line. So the two scenarios for this index bank nifty would be: keep your eyes glued strictly to the 57,500 battleground. So if bank nifty prints a decisive 15-minute candle close below 57,500, check this chart immediately. If you see that green support tower starts to string, so if you are a very aggressive seller, then you might shift to 5 minutes and you can see there would be a resistance break in 5 minutes as well. Yeah, the candle has closed here itself. You can see this. So you might look for positions still 57,500 because 57,500 is still a support zone. And if we see the 5 minute chart, we can have we can see a demand zone complementing it. So there might be a possible that price might consolidate there. So if you see a green support tower start to shrink when it reaches 557,500, this yeah. Okay, 57,500. If you see the OI decrease in the green bar, then it means the buyers are surrendered. Momentum algorithms will trigger a rapid sell-off straight down to the ultimate institutional bedrock floor visible at 57,000. See, 57,000, you have a huge support level. So directly the price might go there, with a massive solid green level is waiting. So the second scenario would be if banking heavyweights try to stage a relief bounce. If the index ticks up, it will immediately scan face first into the call watch buildings at 57, 700 and 800. It might again retrace here. So basically, it might again retrace to this resistance level which you are able to see in the technical chart. So and ultimately the 58,000 fortress, 58,000 is right up here. So less possibilities of price going there. But if it goes there, those no, you need to look for those massive red towers to lose the free. You need to see that bars getting hollow. So that means that the open interest is decreased. Any bounce you see is a bull trap. So that we used to use a minor relief bounces to look for shorting setups near resistance rather than blindly chasing a breakout. So this shows a clear institutional call stacking. Play the ranges, wait for 57 500 to 600 to give a clean directional confirmation. So currently price has moved towards 57 500. Yeah, we can see we told that if the price closes below 600, there's high possibility it might go to 557 500. So so this gives a clear directional confirmation. Manage your position sizing strictly, and let's watch how the next institutional block prints. So this is the option chain analysis for Bank Nifty. So let me know in the comments if you have any doubts. We have analyzed Nifty, Sensex, and Bank Nifty option chains. Let me know if you understood this, how to look at the option chain and how to plan for intraday. So we'll come back again discussing different stocks which had a rise in open interest. We will discuss about the charts to look at and let's see how there is an increase in open interest and how would the stock react today. So just a quick update on stock here. So we can see a huge, massive gap down here. TCS stock is in a downtrend, so keep eye on it. It has retested a broken demand zone, and it has started to move in a downtrend. And if we look at the multiple time frames here, all the higher time frames are showing red, which is a high probability of the price moving downwards. So keep eye on this stock. It has the highest probability of the price to go down. So yeah, we'll be back in few minutes discussing about the stocks which has increase in open interest. So until then, let me know if you have any doubts in the comments.
Hey guys, actually we have put the link, demo link. Go through that link and you guys come back till 11:15. We'll be bringing back the open interest which I've gained, and also the stocks you should keep an eye on today. And yeah, till then you just guys go to this website. You can contact us and check out the page. You get an idea. So yeah, guys. So yeah, guys. Here is whatever we were talking. Global IT major Accenture cut its revenue guidance overnight, and that's triggered a sharp sell-off across Nifty IT this morning. So Infosys ADRs alone tumbled around 10% in US trade. This is a live breaking development. It actually flips the picture from what we discussed earlier. So today is looking like an IT-led risk-off day, not in calm one. Here's the full stock by stock like breakdown with the news behind each move. So the first one will be Nifty. Yeah. Open interest up 25.5% from 77.2 lakh to 96.9 lakh contracts. This index level surge is largely the IT story below playing out. Heavy hedging and fresh positioning as the sector gaps down are hard at the open. So the second one is Infosys. Open interest up to 24.75% and the sharpest single stock jump on this list. And here's why. Accenture's guidance cut it Infosys hardest. Its areas in the US fell close to 10% overnight on weak outlook and contract delay worries. That kind of overnight shock explain this explosive options buildup. Traders are rushing to hedge a position for a gap down. So yeah, according to the news, as I told, yeah, according to the news, as I told, there is a huge gap down in the Infosys. You can see here, and also our software has given sell signal here. Today it has given sell signal here, and it went up to minus 5.02%. Yeah, it also yeah given it has given a sell signal here today. So according to the news, it has predicted. Yeah, the next one is persistent systems. Open interest up to 24.65%. It isn't the headline name in the Accenture today, but as mild cap IT services player with a similar client, it's getting caught in the same sector wide repricing. Yeah, currently it's trading near broken demand zone. So our system also already gave a sell signal. So just keep your eye on candles so you can prepare for your sell. You can keep an eye on this. And also in the multi-frame matrix, it has given all red. So you can see the market will be bearish today. And also it gave a sell signal here. So according to the news and new updates. Yeah, the next stock will be TCS. OI interest up to 14.13%. India's largest IT company. Naturally, one of the first name traders hedge around whenever a global ball with like Accenture flags weaker demand. TCS shares were also flagged as neither multi-year lows in recent sessions. So we'll open the TCS stock also. Yeah, guys, you can see the chart here, the TCS chart. Since it has already broken the demand zone here, and there is a very big red candle here, so there is a high probability that it will go down, and there is a lot of sellers here, aggressive sellers here, as I mentioned in the news. And also, you can check here all the in multi-frame, all the signals are like red, indicators are red, so there is a probability that it will go down. So yeah, the next stock is Coforge with 14.20% OI in increase. Same thing, mid-tier IT, same road though, from Accenture's commentary on slower client spending. So yeah, since already Harish has briefed about this particular stock, it has already broken the demand zone here. If it closes exactly under support level here, it will go down. I mean, there is a probability that it will go down. Also, you can observe whenever I'm talking about the particular stock and the news, you can check the multi-frame matrix here. So yeah, the next one will be Tata ALXCI with the open interest up to 12.35%. Smaller niche IT services name, but still getting swept into the broader sector, directing like today. See here, the same thing again you can see here. It's currently trading near third support. If it close under third support and this particular demand zone, there is a high probability, very high momentum you will get. High probability that will go down. You can say all the multiframmatics in all it's red only. Yeah, the next one is amber entry. OI up to 12.21% and the highest volume on the list outside Nifty. This one's a bit different. No major freshers today. No brokerages have flagged near-term like margin pressures in the EMS from cost inflation and rupee depreciation, like which may be keep options actively elevated here. So it's currently trading near somewhere near this resistance and the support. This one's working as a resistance now, so it's a support. It's trading somewhere here. So if it retest here, it retest here, and if it breaks particularly here, you can look for a down movement. There is a probability that it will go down if it retest here in this support. Next So yeah, guys, someone is telling voice not coming. Yeah, sorry, we were having some issues, I guess so. Yeah, I was talking about the. So yeah, we were having some technical issue. That's why the voice wasn't coming. So yeah, as I mentioned, you should keep an eye on Infosys persistent systems, which I already showed the chart and also explained. Also the TCS and also the HCL Tech. Here's as I told you, HCL. It's still right on the back of HCL Tech stake in Server AI. And so my honest read here is the IT sector is the real theme to watch today. Whether it turns bullish or bearish depends on how price moves alongside this OI build. Raising price with raising OI is a long build up. Falling price with rising OI is a fresh shortening. So keep your eyes on both together, not just the OI number alone. So that's the F&O picture for today, guys. And back to the broader market wrap. So Harish will be taking care of the stocks which are outperforming and which are underperforming and sector wise.
So hi guys. So we'll now discuss about the performances of each sector. So let's understand how each sector is performing today. So before that, I'll just show you the call that we gave to our community in Sensex. So yeah. So we had previously discussed about the option chain in Sensex, and we saw major psychological levels using increase in open interest. So based on that, we analyzed a chart, and we saw a resistance break here. I'll just show you. Let the chart work. Yeah. So if we look at this level, I'll just switch it to 1 minute time frame. Yeah. So if we look at this level, we saw a resistance break here and candle closing below this. So we gave a call. So we gave a buy in put option. So we recommended our community people to buy at 375 here. So price reached around yeah, we captured around 40 points. So this was a call given by our team to the community members. So just to inform the community performance here. So yeah, let's dive to in a sector-wise analysis. So first, we'll be looking at the Nifty IT sector. Just a minute. Yeah. So Nifty IT is yeah. So Nifty IT is that index is bleeding heavily, down a massive of minus 5.24%. So this is a massive broad-based capitulation that has completely dragged down the benchmark Nifty 50 index, which is beneath its 24,000 psychological milestone. So overnight, global tech giants Accenture severely lowered its revenue growth guidance for the financial year ending 2026 and 2027. So Accenture explicitly cited delay discretionary corporate tech spending alongside growing structural operation anxieties. This sent shockwaves through Indians' areas overnight, so triggering immediate mechanical institutional dumping across heavyweights like Infosys, TCS, HCL Tech, and right from the opening bell. So this is the reason that Nifty IT sector is down by minus 5.24%. So we'll just look into few stocks in the IT sector. Let's see if we get any. Is there any possible of continuation of downtrend, or is there any support level that is showing in a technical chart? So let's open HCL Tech. Just switch it to higher time frame. We'll look at the 15 minutes time frame. So price has reacted to a demand zone. We can see there is a huge reaction here. So the price is moving towards a demand zone which had created and which is broken, and even there's a broken support zone. So you might see a retest here. You might see look for the retest, wait for the rejection levels. Since the IT industry is in downtrend, so you might look for short positions here. So previously, our indicator had also indicated a buy signal when we had a positive news related to the IT sector. So we had gained around, yeah. So we had gained around 5%. It exactly reacted at this trend line level, and it gave a downward momentum here. So this is how our indicator exactly performs according to the impacts that has been created. So whenever we are looking at the 15 minutes chart, if we take a position based on this indicator, we can target around 2 to 8%. So that's what the system is capable of giving results. So we can even check the another signal that the indicator that the system gave us. So we had captured around 7%. So this is one of the stock in IT sector. So since the industry is in downtrend, so just look for short setups. Once you see a rejection over this resistance level, then we'll look TCS. So we also saw before there was a huge change in open interest. So when there is a high increase in open interest and price opens up with a gap down, then there is a high probability of price moving downwards. So even the indicator has given us a sell signal. So we can look for 2 to 8% if we execute on this. So the price has currently tapped the broken demand zone, and it's going in a downtrend momentum. If we see the charts, the multi-time frame charts, multi-time frame charts are showing red. So all time frames are agreeing with the bearish structure. When we can confirm with it with a higher time frame as well. Yeah, so even the higher time frame has given, and more importantly, it has closed below the support level. So these are the strong indications of the price moving downwards. So you can keep eye on the stock as well. So next we will move to the next sector. So the next sector is banking heavyweights, which is Nifty banks. So the banking engines is down, but showing relative resilience compared to IT. So these are the sectors under pressure. So institutional call rating blocks at 58,000 are keeping a tight lid on Bank Nifty. We had discussed the option chain in Bank Nifty as well. So it is the Nifty Bank is down by 0.65%. So we'll just pick few stocks in Bank Nifty and let's do an analysis on that. So we'll take Bank of Baroda. Yeah. So if we see this particular stock, we see again in a 1 hour time frame, we see a price is still closing below this resistance level. So the support level. So let it close. Wait for the close. So 15 when we switch the chart to 15 minutes, yeah, we see a perfect close below the support level, and even there's a supply zone being regained. So price has tapped above supply zone and it has given a sell off from here. So you can target till the next resistance level as well. So next support level. Yeah. So the next stock would be next sector would be Nifty Auto. It is undergoing a brief systematic profit booking after strong multi-day run-up. It's actually down by 0.78%. So we'll just look at the stocks in Nifty Automobiles. So I'll pick a stock here. Yeah, so if we see this particular stock, we can see 15 minutes. If we see in the 15 minutes time frame, we can see that there's a strong break of the support level, and price is closing below this. It is closing below this EMA level. So there might be a reaction around this demand zone, broken supply zone, which might act as a demand zone. So keep an eye on it. So we'll move to the next sector. So Nifty Realty is also down by minus 1.01%. So it is emerging as the second worst hit sector. So high inflation out of the US Fed dot plot is causing a short-term momentum, which is causing a long unwinding in local real estate counters. So if we look at a particular stock in this sector, we'll choose yeah. So we'll choose Shobha. So just look for a short-term fall because since the trend is an uptrend, no, there might be a possibility of a short-term correction here. Since the price has closed below this support level, you might expect the price to reach 1,400 somewhere, around 1,400. Because you see a cluster of zones here, you have a support level. So this might, yeah, it will help the price to bounce back. So just look for a short-term fall in this particular stock. So next one, let's see which sectors are in green. So the first sector that is in green is Nifty Media. So Nifty Media is leading the charts as the top outperforming sectoral pocket today, with immediate speculative buying momentum. So let's understand the news that have impacted the Nifty Media today. So the main reason is the foreign exchange tailwind, with Brent crude dropping consistently below the $79 per barrel threshold due to the progress in the US-Iran peace deal. The Indian rupee has strengthened notably towards 94.22. A stronger local currency directly controls raw paper import cost for print media and heavy hardware machinery for broadcasting networks. So the consumption factor is, the broader index is tracking steady corporate ad spend guidance, so with key structural consumer and rural demands projecting a recovery supported by steady monsoon onset, media giants are looking at a robust VAT revenue pipeline growth for the upcoming festive and corporate release cycles. So if we just will look at the stocks in this particular sector, so we'll look at the just a minute. So if we look at this particular stock, we see a strong momentum breaking multiple resistance level. So we see this resistance has been regained. So you just no, we can just look for a retest around this level because we see a multiple resistance level and a supply broken supply zone which will act as a demand zone is complementing it. So you can also see a strong trend line break here. So price might retest this levels definitely, and it might just look for a candlestick patterns. Once you get those rejections and close above the previous red candle, then we can consider this stock for a buying momentum. So another stock would be Another stock would be Hathway Cable and Datacom Limited. So if we see this particular stock, we had got a buy signal. So a few days before, we had a good news related to positive news related to Nifty Media. So we had our system had generated a buy signal here. So we had captured around 14% within a span of 3 days. So since the stock is in uptrend, you can look for a retest. You have a support level here. So just wait for the retest in any one of the levels and look for a rejection or a candlestick pattern. So once you get those confirmations, then you might can enter with the confidence. Yeah. So the next sector would be Nifty Pharma, which is up by 0.37%, and healthcare, which is up by 34%. So the US Federal Reserve interest has forced the US dollar index, which is TXY, to tick back up towards 100.92, lifting US Treasury yield. So since Indian pharmaceutical majors derive a dominant chunk of their revenue from US generics, formulation exports, and specialized CDMO contracts, a strengthening greenback acts as an immediate realized booster for their rupee denomination export earnings. So today, severe minus 5.5% breakdown in the Nifty IT index, which is triggered by Accenture's lower growth outlook, which we spoke before. So, as forced institutional desks to rapidly reallocate their large cap tech holdings, fund managers are executing classic defensive trade, pulling capital away from growth declines to parking it in stable, low beta healthcare networks to insulate their aggregate products. So, we'll just look few stocks in Nifty Pharma. We see a strong upward momentum in this particular stock. So if we switch it to a smaller time frame, yeah. So the price had, yeah, today. So the price had closed above this supply zone in 5 minutes time frame, and it has given us a 1%, 1.43%. So for stronger buying momentum, you need to wait for this 15 minutes candle to price above 1619 because it's a major supply zone. So you might see a slight consolidation here. So once it closes above 1619, you might see a huge momentum and expect our system to give you a buy signal. So it had given a sell signal a few days before when pharma industry was in top losers. So we had gained around 6%, minus 6%. So this is the overview of Nifty Pharma industry. So and coming to Nifty Healthcare, I'll just put a stock related to it. Yeah, so we can see a break of multiple zones and resistance level here. So price is currently trading at a major supply zone, bullish, and the industry is performing very well. So you might look for a retest around this zones. Since it is trading, you might expect a slight reaction correction and then move from it. So once you get a confirmation like candlestick patterns and a rejection, or you can also wait till the price breaks this level, which is around 1460 for a greater momentum. So if we look at the 5 minutes chart, yeah. So our system has generated a buy signal here. So we would have got 3% in 21 hours. So we can also see that trend line is broken in a smaller time frame. So you can also wait for this retest level as well. So I told this supply area in 15 minutes comes here, and the broken supply zone comes here. So you have a trend line confluence to it, and a broken resistance level which will act as a support. So these are the confluences. You have multiple confluences here. So you can have the confluence. You can see the candlestick pattern. You can wait for the rejection levels, and you can look for a upside moment. So these are the information and overview on sectors and about particular stocks in the sectors performing. So hope you got idea about which stocks to look for. So let me know in the comments if you have any favorite sector or favorite stock to analyze. If you have a doubt related to any particular stock, particular sector, or if you want us to analyze on index or what we discussed on option data, whatever doubts you have, please put it in the comments. We'll try to clear your doubts. This is purely based on educational purpose. Manage your risk. So after few minutes, we'll be looking at the stocks which are purely based on fundamentals, which have a long-term view. You can have a long-term view on that. So we'll be discussing on the stocks based on fundamental perspective. So stay tuned for that. So our viewer has asked about TCS. So I'll just have a TCS chart on it. So we had already discussed about TCS. We can see multiple time frames indicating a downtrend. So you can wait for a retest around this support super trend. So it has also our system has also given a sell signal here. So you can expect the stock to fall around 2 to 8% with a holding period of 1 to 6 days. So you can see that we had already discussed about this. You can see a price close below the support level. So there is a strong indication that the price might go down, and we can also see a system has generated a sell signal in 15 minutes time frame. So hope you got the idea on TCS stock. Let me know in the comments if you have any favorite stocks to analyze. So we'll be back at 12:25, discussing about the stocks to look for purely based on fundamentals. Stay tuned for the updates.